Hey guys, how's it going? It's Brendan here, and welcome back to the Crypto Analyst channel. I hope all of you guys are having a great day no matter where you are from, but it's finally decision time for Bitcoin, because after almost a month of consolidation, we're starting to see Bitcoin turn over and break down. And today I want to talk about why Bitcoin's squeezing, what this squeeze means, and where Bitcoin's likely to go from here. So if that does sound interesting, all that I ask is that you stick around for the video, and if you like it, consider hitting the like and subscribe button. So let's go ahead and begin here and start things off with arguably the topic that we've talked the most about, being this previous consolidation range that Bitcoin has had for almost the last month to month and a half now. Now, I want to start off with this because this is arguably the most important zone, because if we can understand what's happening with this previous consolidation zone, then we can understand why Bitcoin looks a little bit more bearish in the short term. So it all started after this really big move to the upside, which was followed by Bitcoin essentially just playing a game of bouncy ball for the next, like 6-7 weeks or so. And so when I say it's playing a game of bouncy ball, that simply just means that it is going from support to resistance, back down to support, back up to resistance, and then just rinse and repeating this cycle over and over again. And it wasn't until the end of July that we really started to see Bitcoin turn over and use things like the 20-day moving average, which is this blue line here, as a newfound resistance level. Now, this isn't anything new, and we'll kind of get into how Bitcoin's rinse and repeating the same process and the same cycle that it's done for the large majority of this year. But we'll get into that in just a moment, because I want to talk about the other resistances as well. So after Bitcoin started to turn over and use the 20-day as a newfound resistance, it also broke down through the floor of its previous consolidation range, where it had bounced already like 4, 5, 6 different times. And upon breaking down, we can see that the immediate retest to the upside was bouncing off of the 50-day and immediately going back into the previous floor, which was a support, testing it as a newfound resistance. Now, this is generally not a good sign. It kind of goes in the theme of a break, hook, and go, where there is a breakdown, a hook turning the previous support into a newfound resistance, and then a continued go to the downside. So generally, this isn't the most bullish thing to see, but the big new developments here come with the last 2 daily candles. So up until this point, if you are a Crypt Nation member or an Altcoin Alert member, this is going to sound a little bit familiar to you, because you guys get access to all this information early through the Altcoin Alert coaching call that we had yesterday and the Crypt Nation newsletter that we had go out on Tuesday as well, actually. But this is where we kind of start throwing a wrench into things, is because with these 2 daily candles that we just had on Tuesday and even a little bit of today on Wednesday as we are recording this, Bitcoin came back up after its breakdown of the 50, and we saw a really nice buying candle, but it wasn't that easy. It never is. And we still saw that the 20-day was continued to be used as a resistance, and the following candle after this big buying candle was just immediately pushing sellers back down and pushing price beneath all 3 of these resistance levels again. So short recap, Bitcoin has turned its previous support into a newfound resistance, while also holding the 20 and 50-day moving averages as resistance as well. So in the short term, yeah, Bitcoin looks a little bit more bearish. And what I'm kind of seeing here is that Bitcoin has a higher likelihood of falling back down to the 200-day moving average, or back towards this uptrending support line that it has. Now, the common misconception here is that people are saying that this is going to be the next Bitcoin crash. This is going to be the next thing that is just like a catalyst to the downside. And I think that is an over-exaggeration, because all that this would maybe be like a 5 to 10% move on Bitcoin, leading it back down towards that 200-day moving average, which is going to be closer to like 26, 27,000. So again, not like this massive move that's going to cause new lows. Just saying, hey, in the short term, things are looking a little bit more bearish. It wouldn't be crazy if prices fell. Now, let's get into kind of the processes of this year, because as I said earlier, this isn't anything new. What we saw is that upon the breakout of this year, Bitcoin broke its 200-day moving average, had a downwards consolidation, retested the 200-day support, big rally to the upside, which was followed, I'm going to redo this, and then we bounced off the 200, rallied up to the upside. We saw a downwards consolidation, rallied off this uptrending support right above the 200-day moving average, and then that leads us to where we're at today, which is this big rally followed by another downwards consolidation. Now, I want everyone to notice how similar this looks to right here, because we had the big move up, we have the same sort of downwards consolidation, or bull flag as a lot of people like to call it. And with this, we had the 20 turn into resistance first, we then had the 50, and we see the 20 and the 50 acting as resistance right here, right here, right here, just all the way down. These ones were acting as resistance until we came to the bottom of our support areas. So it looks very similar right here to what we were seeing previously and what we're currently seeing right around here. So that's kind of a good thing for the mid and long-term bulls, is that while the short term does look a little bit bearish, the mid and long term are actually still looking very, very bullish. I mean, Bitcoin just had a higher swing low right here, and it just had a higher swing high right here. So there's really nothing for the bulls to be too concerned about, especially if you're more of a long to mid-term bull. You really don't have too much to freak out about really until this support area or this 200-day moving average breaks around the mid 20,000s. So I'm not really fretting here. And so with that, that kind of begs the question, what do I think is going to happen from here? Well, again, I think the short term is going to look a little bit more bearish. I think the mid and the long term are actually looking pretty decent for Bitcoin. So if Bitcoin wants to retrace, maybe the mid 20,000s is a decent area for it to form another higher swing low. And then the new information is that to the upside, if Bitcoin's going to break out, if it's going to repeat this cycle again, then the big area that I'm looking at is this previous breakdown or this previous consolidation range that we had from Bitcoin on the way down. Now, why is this consolidation range significant? Well, because this is the first consolidation range that Bitcoin formed after breaking its 200-day moving average from the previous bull market. So we saw the 200 break right here, and upon it breaking, it immediately rejected that 200-day moving average here, then rejected it again here, and then this is that consolidation range that we are looking at. And so if Bitcoin's going to make another move to the upside, this is the one that I'm looking at closer towards like the mid to upper 30,000s is going to be kind of the big area. And so this is the one that I'm keeping an eye out on, and I'm going to zoom out just so we can see it a little bit better. But maybe Bitcoin's able to come down, bounce, come up here, and make its way up into the mid to upper 30,000s. And I think that this could be a nice little area for Bitcoin to kind of have its next target at. And so that's what I'm keeping my eye on in the short term. But other than that, the crypto market has been pretty quiet. I mean, we go and we look at things like Bitcoin dominance, and Bitcoin dominance has been just as sideways as a lot of the altcoin market has been lately. Pretty much stuck between around 49.5% and around 50%. And so there's not too much happening on this front, but I think that the really interesting development here is what's happening with the DXY. And for the people who aren't familiar, the DXY, or the US dollar currency index, has been routinely an inverse correlation to Bitcoin, meaning that if the DXY goes down, Bitcoin goes up. If Bitcoin goes up, the DXY goes down, vice versa. They move in opposite directions of one another almost entirely. And so when the DXY turned around and entered into its bear market at the end of last year, this is when Bitcoin really started to rally. And so while Bitcoin broke above its 200-day moving average and it's now testing it as support, the DXY is doing the opposite, and it broke below its 200-day moving average and it's now testing it as resistance all the way down. And so the thought that I have here is that, if Bitcoin is going to go and touch its 200-day moving average, then maybe Bitcoin will bounce off of its 200-day moving average at the same time that the DXY comes up here and rejects its 200-day moving average. Now, does it have to happen? No, but it is something that I'm kind of keeping an eye out on. And again, because these markets move so inversely from one another, I think the DXY is one of those charts that is at least worth having in the back of your mind. And also just the way that Ethereum's been behaving to the 200-day moving average is kind of similar to Bitcoin. Because while Ethereum has touched its 200-day moving average a little bit more frequently, it still held it as support. You know, it came down here, bounced once, bounced twice, bounced 3 times, and Ethereum's a lot closer to its support areas than Bitcoin is to, you know, its. Bitcoin's, again, probably like 5 to 10% away, and Ethereum, on the other hand, oops, that is the wrong tool. Ethereum is maybe like 2 to 3% away, depending on what kind of support you're looking at over here. And Ethereum also looks like it's almost forming a fairly large pennant or symmetrical triangle. But the good news here is that, again, it's coming towards the bottom of support, and the support has, for the most part, held for the large majority of this year. So that's what we're looking at across the board. So decision time is indeed coming. It wasn't a clickbait caption or thumbnail. You know, I truly do believe that a decision time is coming, and that we are probably coming to the end of this little sideways consolidation range. And, you know, as we come towards support, I'm really interested in accumulating in some positions on both Bitcoin and Ethereum here. Now, again, nothing I say here is legal, financial, or tax advice at all. I'm simply just a guy on the internet talking about what he enjoys most, which is the great world of crypto. And a crazy stat that I was looking at the other day is that we are approaching the 7-year mark of this YouTube channel, which means that we have made over 750 public YouTube videos and over 1,000 videos in total over the last 6 to 7 years, which is wild. So if you're one of the OGs and you're still around, drop me a comment, you know, drop me a, you know, something. I'd be happy to chat with all of you down there. And that's going to round us up, everyone. So again, I hope you all found this information useful. Again, my goal is not to tell you what to do, but simply give all of you the information so that you don't have to go digging around for it all for hours, because that's what my job is, and feed it to you and let you make your own decisions from there. So yeah, well, that's going to round us off. Again, I hope all of you enjoyed this video, and I'll see all of you in Friday's YouTube video as well.